I grind cause I gotta get paid. 1% chance, 99% faith. I fell in love with the hustle, I fell in love with the chase. No emotion, put in the pain. We get it no matter the weather. Sun, snow, sleet, rain. Go sleep and do it again.
Another day, another dollar, and we back for some bread. So let's get straight into it. Today we are going to be backtesting gold for the 6th month of 2025, I believe. That'll be June of 2025, and we're going to be discovering how profitable is our strategy during that month. Alright, so let's get straight into the video. So I just got some sort of a confluence after the 4-hour mitigation, and this is how it looks. Okay, so I just marked out the 4-hour point of interest that I currently have on the 4-hour time frame, and this is the daily point of interest that I'm currently waiting for. So I want to see how the market reacts at this 4-hour point of interest, as well how it reacts this one at the daily POI. So I'm just going to wait to see if I find an entry in the one. Okay, so as you can see, it entered that 4-hour point of interest, and it somewhat changed character right here. So we are going to scale down on lower time frames and look for an entry. So far on the 15-minute time frame, we did get a change of character along with the sweep of liquidity right up there. So now what I'm interested in is look for an entry, and we do have an entry now. I just realized. So I will just remove the 4-hour point of interest now and place this OB right here. Why this OB, you may ask? It's the one that changed character, that made a breakout structure to the downside, as well it left an imbalance right there. So it's very much in our favor. So I'm just going to wait for retracement up here, and then see if on the lower time frames, on the 15 or 5-minute time frame, I'm now just introducing this into my entry criteria, seeing if I have an engulfing candle towards the bias I want. So in this case, I want the bearish engulfing. So let's see. Okay, so no retracement just yet. All right, no retracement either. Still no retracement. Okay, so as you can see, we finally got a mitigation back to the upside, back to our point of interest that we had marked out on the 30-minute time frame. So like I had mentioned earlier, I want to see a bearish engulfing so far, which we did get right there. So we did get the bearish engulfing, and that would have been an entry, but now I'll just place my entry right here. Right, and it's just roughly about what I risk. So let's find an entry right now. Okay, so as you can see right now, I just marked out the entry as well as the take profit area. So always the take profit is the previous high or low before the mitigation or our entry has been ticked in. So let's find out how this trade goes, because remember I said I want to see a mitigation into our 30-minute fair value gap and order block right there, and we got that. And I said I want to see at least on the lower time frames a bearish engulfing candle, of which we did get on the 5-minute time frame. All right, so I want to see if this will actually play out, having introduced this new way of entering. However, it does move away from the original entry point, but sometimes it's worth the risk, because it might actually remove some unnecessary losses, instead of us having to have waited and find out if the market is continuing to go to our bias or it was still going to consolidate. But in this case, it immediately gave us that bearish engulfing, so it just might be trustworthy. So let's see. Okay, so one thing I've noticed, the market did not come back to retrace. Okay, maybe it just might come, but it has not came back to retrace our entry. So far would have been in take profit from there. We are in profit right now, but we want to see if it will retrace our bearish engulfing that was there in the first place and still continue to the downside. Nothing yet. Okay, we just got the mitigation right there. So let's see. Wow, definitely rejected after the mitigation on the 5-minute time frame. Still pushing. Okay, so we almost got taken out from our entry, which leaves a lot of skepticism with this trade, like waiting for a bearish engulfing. We didn't get taken out, but like the retracement was just too much. So this would have been a retracement back into our original order block that we would have entered from. So far we're still in, but let's let it continue to run. Okay, so we just got taken out, and I realized again I have to respect the 1:3 at least, because at 1:3, if the market is to reverse back to the upside, at least I closed some profit. So that's something I ignored this time, but definitely I won't do that again. So I have to respect the 1:3, definitely. Okay, take a look at this. The market still continued to drop after taking us from our original entry. So if you take a look at this is the 4-hour point of interest that I had marked out, right? And I guess I entered right here. So as you can see, the market swept liquidity right there. We entered right here. So the market just took us out as liquidity, and it's still continuing to the downside. So what we are going to do again is look for an entry. So far there's nothing. I don't like what I'm seeing right now. I don't. So I'm just going to let it continue to play out. I guess it just left without us. So let's see what it does on the 4-hour. At least if it retraces back into here, and then I might be looking for shorts again. Okay, we just got the retracement. So as you guys can see, we actually have this order block with the fair value gap on the 1-hour time frame. So this is now my key interest that I'm hoping the market retraces into, and it's the most extreme zone as well. So let's see what it does from there. And we are still going to incorporate the same thing. Once it reaches at this point, we are going to wait for a bearish engulfing from the lower time frames. Okay, so the market didn't come back, right? But instead, after the mitigation into that fair value gap, the market retraced. It didn't retrace, but it had a bearish engulfing right on this candle. So if we were on lower time frames, would we have found an entry there? So we did get a change of character, and then market retraced back into the fair value gap instead. Okay, so right there the market left without us. We're just going to wait for another trade. And what is this pattern? Please comment down in the comment section right there. What's this pattern? So I just found an entry right now, so we're just going to see how this plays out. We're taken out again. Take a look at this. It took us out by a pip and immediately reversed back to the upside. How crazy. So I guess next time my stop loss should be at the end of that low instead of the end of the auto block, because that's not the first time it happened. So definitely a learning experience. So the stop loss, that's where it should be, not just directly below. Okay, still gonna target a 1:3, just to be a 1:3. Okay, there we go. Finally hit take profit, but the second loss was rather manipulation, so it was not an accurate loss. The market, yeah, so that's a learning experience. I just have to remember that the stop loss should remain behind, a few pips away from the actual point of interest. So let's go first W. Okay, so I just got a retracement back into another point of interest. So now I want to see if I get anything right here. Okay, here's what I'm going to do. Stretch this up and wait for a retracement in here. Okay, scale down on lower time frame. So technically we did get a sweep of liquidity. Let me remove this. Sweep of liquidity, change of character, fair value gap, and an order block. So this is my entry criteria, and this is where I should be entering. So I'm just going to place an entry, buy, stop loss, and then take profit. I'll just make it a 1:3 for now, but I have to be targeting the previous high. So a little bit away from the trade actually, yeah, like this. So go back on the 4-hour time frame to place TP at the high. Firstly, stretch a 1:3, right? 1:3 is here. So as soon as the market comes there, we take out some profit. 1:3, and then at least I have to take out profit worth 1:1, so that I'm at least removed from risk, right? So let's see. So as you can see, this time I'm risking $45 to make $260. The moment it gets to 1:3, I have to close $45. Let's go. I actually want to sit on the 15-minute time frame and see if I can get a bullish engulfing on the 15-minute time frame, and then I get a second entry, and then we see how it goes. Okay, so here's a bullish engulfing on the 15-minute time frame. Right, let's see if it comes back there, right back to this line. If it does so, I'm getting a second entry. We did get a second entry, so I'm gonna place my buy and then stop loss just right beneath again. So now I'm risking 100 instead. So now for the second entry, my stop loss is now at the 1:3. So now I have 1:3 and a 1:6. So let's see how it goes. Okay, got taken out. Both got taken out. How unfortunate. Got another entry. So that again was manipulation. So this month we're just finding out that the month of June had too much manipulation. So they're targeting a 1:3 now. There you go, 1:3. So month of June had too much manipulation, but the trade will still go to your desired target. Yo. Okay. Take profit hit. There. So far we're at June 11, and from it, so before June 11, or so far at June 11, we've taken about 4 trades, right? I think 2 losses that were actually losses, and 2 losses followed by 2 wins. So what happened with these second 2 losses was those were market manipulation, and the market still went to the desired take profit target. So we're just finding out that the month of June was very volatile, right? Hence why there was a lot of manipulation. So people were getting trapped into entries, and the market manipulates them and then still go to desired take profit target. So that's just something to take away from this back testing session. So I just completed the back testing right now, and this month we took 7 trades and a total win rate of 28%. So we are having a consistent P&L basically. Our best months are 66%, our worst months are 28%, and still managing the month profitable. So this is what we have, man.